This is Shah. Right now we are looking at USDJPY, and this chart is sitting at one of the most important decision zones on the higher time frame. The reason I'm covering this pair is because price is reacting directly inside a weekly strong supply zone near 160, while at the same time the daily time frame is still respecting a bullish trend line support. This creates a battle between higher time frame sellers and lower time frame buyers. So the real question is, does USDJPY break higher from this structure, or does the weekly supply finally push the market down? Let's quickly recap what has been happening. Previously, USDJPY made a strong bullish expansion from the 146 region and continued creating higher highs and higher lows on the daily time frame. Buyers stayed in control for months, and price eventually pushed back into the weekly supply zone around 160, which historically acted as a strong rejection area. Now looking at the current price action, we can see rejection, wicks forming near the supply zone, while price also pulled back toward the rising daily trend line support. This tells us the market is compressing between resistance above and support below, which usually leads into a strong expansion move. Now let's talk about the key levels, because this is where smart money decisions happen. The weekly supply zone between 160 and 161 is the strongest resistance area on the chart. Sellers are highly active there, and this is why we are seeing rejection candles and hesitation. On the downside, the daily trendline support currently comes near 155 to 156, and this area becomes very important for buyers. As long as price respects this trend line, the bullish structure remains valid on the daily time frame. For investors and swing traders, the best entry zones depend on confirmation. The first and safest bullish entry zone sits near the daily trend line, support around 155 to 156. If price reacts there with strong bullish candles and rejection wicks, then continuation back toward the highs becomes highly possible. The second opportunity comes only if price breaks above the weekly supply with a strong daily or weekly close above 161. That breakout can trigger aggressive upside liquidity and continuation toward new highs. Now for bearish traders, the best setup comes if price starts rejecting strongly from the supply zone and breaks below the daily trendline support. That would confirm weakness and open downside targets toward 152 and potentially lower liquidity zones. From a market structure point of view, the weekly time frame is currently at resistance, while the daily time frame still remains bullish because higher lows are intact. This means confirmation matters more than prediction right now. Now let's bring in liquidity, because this is where the real move happens. Liquidity is sitting above the weekly highs near 160 and also below the recent daily lows around trendline support. The market can easily sweep one side before showing the real direction. The strategy here is simple. Investors should avoid emotional entries inside the middle of the range. The smarter approach is waiting either for a bullish confirmation from trendline support or a confirmed breakout above weekly supply. Invalidation is clear. A daily close below the trendline support weakens the bullish structure and shifts momentum toward the downside. Right now, USDJPY is trapped between weekly resistance and daily support, and the next breakout can become explosive. Join shah.com for free signals. Let me know which coin you want me to cover next.